next session is a fireside chat. We're diving headfirst into the world of finance with Insight Partners' own Hilary and Adena Friedman, Chairman and CEO of Nasdaq, Inc. These two incredible women are here to talk about the future of the financial system and where AI is having a short-term and long-term impact on companies and the markets.
Well, Adena, thank you so much for spending time with us on stage.
Absolutely, it's great to be here.
So for many of you know, Adena's been in the financial services industry more than 20 years. She's been in capital markets, she's been in private equity, she's been running a large global exchange, and you had a huge transformation since you took over as CEO in 2017 and then became chair of the board in 2023. So perhaps we could start by giving us a little information about your journey and how you've transformed Nasdaq to very much be a tech company.
Sure, yeah. So fortunately, when I got to Nasdaq, back to Nasdaq 10 years ago, I came in as president. I was at Carlyle and I came back. And I had an opportunity to work with the former CEO to really shape the business a bit, leading into my role as CEO. So I was able to walk into the CEO role on offense from day one, which is fantastic. It's a great way to make a transition. And as we sat together and we started to form our strategy, we focused on answering 4 questions. What are the technology trends that are going to define our industry over the next 10 years? And we had to have conviction, or at least a real position and a view as to what are the technologies that are coming in that would be truly transformative. The second is, what are the industry trends that are going to transform our clients over the next 10 years? What are we great at? And what do our clients expect us to be great at? And what are we not great at? And what might not be strategic to our capabilities going forward? And as the result of that is, we decided very much to lean in. We are a technology company serving the capital markets and the broader financial system. Number one, we wanted to be a modern and forward-leaning technology company to help markets modernize, to help the industry modernize. We definitely believe that cloud and AI, back in 2017, we were all in on cloud and AI as being the future of the industry. And we also realized that there were certain services that we offer within our organization that were not strategic to us and our clients did not expect us to be great at. So we actually shed those companies, focused in and bought in other technology companies. And today we have 3 divisions. So we have our markets division where we operate our markets. We have something called capital access platforms, like as all of our corporate relationships, and we provide IR and governance and ESG solutions, as well as our asset management relationships, where we offer deep insights and asset allocation decisions in our index business. And then we have our fintech division, which really helps the entire industry land in the capital markets and manage risk across the financial system. So we provide technology to 130 exchanges around the world, 500 broker-dealers, leverage our technology for risk management, regulatory reporting, and then we have over 2,000 banks that use us for anti-financial crime. And so it's become a very scaled part of our business. And as a result of that, we've obviously grown a lot. And we also have a very deep understanding of tech and how tech is driving the industry forward.
So Nasdaq has very much become a very broad platform under your purview. But we'll turn to the topic du jour, which is AI. And so as you think about financial services more broadly, what do you think are the capabilities that are needed by financial services companies? What do you think, how should they be approaching this in terms of them thinking about, using AI?
Well, I mean, as we all know, I think AI is going to transform every industry. And if you think about the financial industry is by nature a data-driven industry. We always have been. And so AI has actually been a deep part of the industry now for over a decade in terms of algorithmic AI. And we see our trading firms using algorithms to define trading strategies. You're seeing investment strategies being completely driven by AI. We use AI to manage our markets very successfully in terms of doing predictive analytics on our servers and kind of maintenance, as well as actually managing our options markets using some deep AI tools. But then we also started to introduce algorithmic AI into our markets with an order type. We have a specific order type that we are approved by the SEC that allows us to use certain dynamic elements to determine a timer on an order. So we're starting to bring AI actually into markets. But then if you look at it actually on a broader level beyond the markets, I think that's where Gen AI becomes a much bigger part of the industry. And it's both on offense and defense. So on offense, it's how do you create a better client journey? How do you help use AI to be more I would call personalized and targeted in terms of investment strategies for your clients, whether they be retail clients or institutional clients? And then how do you also use it for defense? And that's where we come into play, because I think what we really focus on is how do we make the system more resilient? And AI is extremely applicable to anti-financial crime. Our Verifin platform is by far the most advanced technology at scale, serving the banks. We have a consortia cloud of data across 2,500 banks. We're able to see 1 billion transactions a week across those banks, and we are able to apply very advanced Bayesian models to do machine learning on specific topologies of crime. And then we also use Gen AI to automate all the workflows on the back end. And so that will make it so that crime management is going to be a lot more modern in the next, and we're already bringing that out, rolling that out. So I would say over the next 2 years, we could really transform the ability to manage crime. And then on the risk management side, we're starting to bring much more algorithmic capabilities in to be more dynamic in risk management in terms of capital deployment and things that make it so that the firms can commit more capital into markets because they're better able to manage risk. So those are the types of things that we're really focused on across the Gen AI and algorithmic AI.
Yeah. I want to pick up just on the component of risk that you just mentioned. Obviously, in any sea change like we're seeing in AI, there's opportunities and there's risks. Maybe just talk a little bit about the risks, and then we'll talk about the opportunities.
Yeah.
But you mentioned risk, so.
I think it's important to recognize that the industry has a very high bar for implementing AI. And that's really government mandated in terms of having explainability of the models. And it's getting harder to do that with Gen AI. So you have to kind of think about how do you explain the models, the inputs and the outputs, as well as obviously making sure you're not hallucinating so that the Gen AI is giving you a truthful answer. And then also just governing the models that you're using in terms of whether it's IP leakage, client data leakage, things like that, and making sure you have a very secure enclave where you're using the AI tools. And so for a provider like us, we have an AI governance committee that's comprised of our head of AI and our chief risk officer. And they really partner together to think about how we enable AI in the organization, but in a responsible way. And we get audited. I mean, obviously, we get audited by our regulators, but we also get audited by our clients in terms of understanding the explainability of the models and for them to be able to meet their own regulatory obligations. And I think that's, again, a high bar. So going into the financial industry, when we get them to work, they work extraordinarily well. They've been pressure tested. They've been, I think that there's a lot of governance around that. But it does mean that you're not just like flying into the market and doing whatever you want. You have to make sure that you are really secure, resilient, and factual. Yeah,
that makes sense. On the flip side, what about the opportunities just broadly across the financial services industry?
Yeah, I think beyond what I just said, you've got, whether it's in client success and client management, whether it's in advisory work that you're doing, it's in trading, obviously, investment management, and certainly in terms of being much more personalized and supporting your clients as you're thinking about helping them make the right investment choices or even the right life choices. Those are all areas where AI is going to become, I think, an ingrained part of the industry. And then, of course, on the resilience and just the efficiency. I mean, just like, for instance, with our anti-financial crime tool, we've automated the entity research portion of our anti-financial crime tool. So that means that instead of taking 90 minutes to go out and understand whether this entity that we've alerted is in fact a criminal actor or not, you don't have a person do that. You basically allow the AI to go out and do the research for you. They write up the report and you give you all the sites so that all you're having to do is review it. That is a massive time save. So there's a huge efficiency gain that also can be driven into the financial industry.
Yeah, that makes sense. When we talk to our portfolio companies around integrating AI or using AI, we always think about it in two respects. The one is what are they doing in their products to service customers? And the other is what are they doing in their business to drive greater productivity? So I'm sure Nasdaq thinks about it in the same way. And in fact, in your earnings calls, you've talked about how you're using this in a client-facing way. So maybe you could give us a
actually, so we always do the same thing. We say AI in the product, AI on the business. And those are two very different work streams within Nasdaq, because in the product, it's every product team is incorporating these capabilities into their agile pods and kind of bringing the capabilities out to their clients. And that, again, we've already been deploying that, because not only in anti-fin crime, but in our IR solutions, in our governance solutions, in investment. Like we have a whole bunch of AI generated capabilities now that are being rolled out to our clients. So that's of course the fun part, right? That's the fun part. If you're a developer, you're going to town, it's really interesting, you're using new technologies to deploy higher value activity for your client. The AI on the business, that's the hard part, because you really are saying to your teams, let's re-engineer how we develop code, how we bring, look at the entire product development lifecycle and understand how you can bring automation. And the whole benefit of that is it's about efficiency in order to be able to grow faster. We're a growth business. So how can we develop code faster, put out more capabilities faster, write cleaner code so that you're not having to, kind of be inefficient in terms of developing the code itself, and therefore you're getting better outcomes to your clients. We do a lot of, in the market tech space where we deploy technology to other markets, we do a lot of customized integrations and other things for the clients. And that is an area where we'd love to be able to be more automated in delivering those customizations to the clients. And then, of course, if you're having old tech, if you do have old tech in your organization and you're refactoring it without changing the features, you're just refactoring onto a new code base, it's a huge opportunity to use AI there. So there are lots of ways that you can use it just to be more efficient so that you can then grow faster and deliver more value to your clients. And that's where you have to get over that, kind of the need for you. It's hard to re-engineer a process, let's be honest. People get used to doing things a certain way. And so how do you make them understand the opportunities in front of them if they're actually able to use the technology for a higher value purpose and they can have more fun in their jobs?
Yeah, everybody likes to be working on the next gen stuff. And so maybe, you mentioned one or two of these use cases, but specifically the one that you mentioned was getting this new trade approved by the SEC. So maybe you can explain what that is.
Oh, yeah. Okay, so it's very in the weeds. But so in our markets, we have something called a dynamic midpoint extended life order. So for institutional investors, yeah, it's very esoteric, as I mentioned. So historically, the midpoint extended life order had a fixed timer on it. And I think it was 40 microseconds, where we would gather up orders over a 40 microsecond period of time, and then we'd execute them at the midpoint, which 40 microseconds is actually a long time in markets when our average execution time is sub 10 microseconds. So you're basically just trying to create a little bit more of a way for institutional investors to get more of a higher fill. And with a dynamic order, the midpoint extended life order, though, we look stock by stock, every stock in the market. Every second, we update the timer based on 125 different market factors that are self-learning as to what will be the optimal timer to maximize the fill rate in that stock at that moment. And we've actually been able to double the amount of volume that we put through that order now, like in terms of the client uptake has been really great in terms of just creating a better experience for our clients. And so it's been showing up in the fact that definitely our clients are adopting it and they're really liking it.
And the SEC, given that they are the regulator and they are risk averse, they were fine to approve this, or what? Yeah, how was the process?
It was a great dialogue, actually. First of all, as I talked to you about, it's all about explainability. It's a very, you can tell, it's a very discrete order type. We can talk to them about all 125 different factors. We can show them, kind of all the inputs related to an output, and it's a very simple output. And it's a big benefit to the clients. If we can get them to have a better experience and a better fill rate, then that's a benefit to the entire industry. So I think because of the nature of what it is, it's something that they felt comfortable that we were able to do. And we had talked about how we test it, how we continue to test it, how we're always in the process of improvement against it. So they also can audit it. We are audited by the SEC. So all of that, I think, gave them comfort. But it was you have to sit with them and explain it and spend some time with them. And given the fact it was the first time they'd ever approved an order type like this, you're kind of going through the process with them for the first time.
Yeah, so. It's a great first in the industry and an example, I think, of a harbinger of things to come. When we were talking just about AI on the business, you mentioned your head of AI. So maybe you could just describe the kind of structure that you have internally. Have you set up separate teams? Have you created the next gen team, or is it all integrated into the current business process?
Yeah, so I think first we have a transformation office, and that transformation office is really focused on deploying AI on the business. And so that's one kind of, I'll call that more of a program management office in terms of finding the opportunities, bringing in outside speakers to help people understand the opportunities, and just driving process through the organization. But then within the governance of AI, we have our head of AI, and he has a team. They test out all new LLMs. They have built an AI. We have a Gen AI platform within Nasdaq that team built along with our core engineering team to be able to deploy. We use AWS Bedrock. We're able to use multiple models, so they test all the models. They built the tools. They've made sure all the IP stays within the enclave of this Bedrock instance, and we are able to create skills. And we've just kind of unleashed the organization on being able to create skills within that platform, so that you know that you have multiple models you can test against. And all that same testing is applied to anything we do in the product. That all of those models then go to the governance committee to be approved. All the skills that are deployed into the Gen AI platform go to the governance team to be approved. But it's a very fast approval process. And then the last thing I would say, though, is if there's anything where there's a real project to deploy AI, we have an ROI framework that we apply against it. So you have to kind of prove that there's a return on the investment internally to be able to get any sort of incremental investment to apply AI. But it's, again, we do that all through that same governance process with a very efficient way to do it. So that's kind of how we go about it. But then once it's being deployed in the products out to the teams, that's all embedded in the Agile pods. So we do not have like an AI team that's just doing those deployments. That's actually gone out. Each of the product areas have their own teams that are educated, and they're bringing data scientists into the Agile pods to be able to deploy that.
Yeah, that makes sense. So you've really integrated it into the current workflow of the business, but you have a governance structure that makes sure. Does the governance structure extend as far up to the board? Obviously,
yes.
You know, boards these days, governance is a big thing, but AI is a big thing at the board level, the strategic level.
Oh, yeah.
So before you engaged in this, like, how does the board think about it?
Yeah, well, we had to present all of that to the audit committee. Our audit and risk committee is the governing committee over our AI. But that's all, frankly, normal course of business. In terms of, if you do anything new, the audit risk committee wants to understand how you're doing it. They and the chief risk officer and the head of AI come to the board meeting or the committee meetings pretty frequently and just walk them through it. And the only thing I would also say, the central team, though, what I really like, we have a central AI data science team because they're always testing what's next. And they're doing a lot of POCs within the businesses. So before the business starts just deploying stuff that might be unique or kind of really using the leading edge, they will work with the AI team to kind of do a proof of concept on that, to understand what's next, maybe to test out a model against a new paradigm, to bring that like true, just pure data science expertise into a problem. But then the team has to take it over. Like if you're going to put it in production, that's up to the product team to do. And I do like that confluence of both having a central team and having it distributed.
Yeah, yeah. I mean, the one thing that financial services has always been very rich in is data. And you mentioned it earlier, which is you've really turned, Nasdaq not into just a tech company, but a data business as well. And of course, data powers LLMs. So maybe you could just talk a little bit about the use of data across AI.
Yeah, well, first, we are very fortunate because we have enormous amounts of data inside of Nasdaq. So not only within our markets, we have obviously a lot of market data, but we also have some very dedicated pools, like data lakes that we have based on certain products that we own. So eVestment is a data lake where all of the asset managers in the world, or most of them, not all, but most of them, many of them, will submit data on their performance information. All of the asset owners will then come and use that performance information to make asset allocation decisions. And that's a 25-year database of understanding performance across the industry. And then we also now have partnered with Mercer, and all of their research and data is in that platform, and with another private market consultant to put their data in. So it becomes this beautiful data lake of both structured and unstructured data. So the first thing we've done to apply Gen AI into that platform is taking all the meeting minutes from pensions. So if you're in the fundraising arm of Insight and you're trying to understand what are the strategies that pension funds are really looking for and how do we match up with that, oftentimes you'll read the meeting minutes from their board meetings. It's just kind of getting an understanding of what strategies are coming. We will summarize those for you because they're really long and boring. So we will summarize those for you through a really nice service within eVestment. So that's kind of a good example of unstructured data that we're able to structure for you and make it easy for it to digest. But there's other probably more algorithmic things we'll be able to do with that data too over time. Another one is the anti-financial crime, 2,500 banks, 7 or 8 trillion of assets under custody represented in that data lake, 1 billion transactions a week. So it's a massive data lake of transaction data across the banking industry. and it allows us to be better than anyone at rooting out criminal actors. I mean, better than anyone, because we're able to look at the sending bank, the receiving bank. You're able to, criminals don't just bank in one bank, so they use the system to execute their behaviors. And you can apply very deep Bayesian models. We use computer vision for our check fraud solution. And then we also have very specific topologies that we apply against that. So that's a very deep data science tool.
Yeah.
And then we have others. So those are kind of a few examples.
And those are things that are underway now. You've just overlaid an AI component.
Exactly. So we're not creating new AI native product. We're creating new AI native features within our products, if that makes sense.
Yeah, that makes total sense. I'd love to turn, just because we have someone who lives and breathes the financial markets all day, just to the kind of bigger macro picture. So, from where you sit, at Nasdaq, you obviously have a window into the markets and the actors within the broader ecosystem. What is your point of view around the macroeconomic environment now?
Well, I mean, at the macro level, so I'm going to talk very high level because it's obvious how it impacts individuals is very different. But at the macro level, the U.S. economy has stayed quite resilient over a very tumultuous period of time. And I think that that's really a testament to the strength of our country, the innovation ecosystem that exists in our country as a huge driver of growth. And I also think that the role we have in the global economy. So that resilience, even with a higher interest rate environment, we're still sitting at about a 200 basis point spread between what real inflation is now and where the rates are. So I think a calibrated, normalized environment would be about 100 basis points. So there is an opportunity, if inflation stays relatively similar to where it is now, to kind of continue to have a slow landing, to something that's more normalized. I do think, though, that obviously things change, and the environment around us will definitely determine the speed at which the Fed makes those decisions. But that has allowed us as an economy to have a pretty soft landing so far. And even in Europe, where they've actually had a much more difficult kind of experience over the last 4 years, they are also getting to the point where they're actually returning to some level of growth and getting to a more normalized environment. So that's helpful. And then there are other parts of the world where I think that there's still a lot of opportunity to not only deploy capital, but see an innovation ecosystem come alive in other parts of the world. So as a provider of technology to global exchanges, we focus a lot on how do you create liquidity and an innovation economy within each country. And I do think there are a lot of countries out there that have a lot of opportunity.
Yeah. And one of the benefits of the kind of liquidity that you do provide globally is that small companies, the ones we invest in, can access the public markets. Obviously, the IPO market has been very dry over the last couple of years for various reasons. And so we'd love to just sort of hear your point of view around how things might be changing. Do you think that markets will open up for IPOs? Yeah.
So first of all, it has been a remarkably dry period of time that I think has a lot to do with monetary policy, in terms of having gone from zero cost of capital to, at least in a modern economy, a relatively high cost of capital. Frankly, in historical periods, it's actually not that high. But for our period of time, it's pretty high. And that had to, companies had to recalibrate their priorities, recalibrate towards cash flow. Certain industries slowed down, and therefore selling into those industries was slower. But now I think that we've kind of recalibrated, 2024 has been a better year across the U.S. economy, and that's allowed companies that serve those, the industries probably to be more effective in selling, and you have a cost of capital that's starting to come down. So all of that portends pretty well to 2025, having a much more active IPO environment, and we are seeing that. I mean, the amount of conversations we're having with companies, how we're engaging with them on timing, it's just feeling more certain that there's going to be a fair amount of activity. And obviously, as the markets continue to perform, and with the new administration, you do have the potential for tax policies to be favorable, and I would say also for a regulatory environment that's likely more favorable to allow for exits to happen in a more natural way.
Yeah. The corollary of, if we don't have portfolio companies that go public, they get acquired. And so that's been also something that's been, I guess, constrained in a sense by some of the regulatory environments. So, maybe several of the companies who are listed on Nasdaq are obviously large acquirers, large strategics. How do you think about the M&A environment?
Yeah, I do think that that's been quite constrained over the last several years, and And that, as I said, I think that's why I said a natural way to exit, because I always look at it as if you're going to underwrite risk as a VC firm to a company that has barely just gotten started, has no track record, has a great idea and some very early wins and very early success, and you're underwriting a 5 to 10 year investment. And you need to know that you're going to be able to exit that investment successfully. And there are generally two paths to an exit.
Those pension funds need to know that as well.
Yes, exactly. So you've got two paths to an exit, whether that's IPO or being sold. When that being sold avenue gets cut off, and then you have a higher cost of capital that makes the IPO environment less attractive. But let's just talk about just the getting sold. It means you only have one path to an exit. And therefore, are you going to commit as much capital at the beginning if you know that you only have one path at the end? And I do know the mindset of the private equity and venture world, and I know the exit's very important. So our view is that having an opportunity for innovators to grow and expand, but then also to roll up into larger innovators is a natural way that our economy goes. It's a very natural progression. And I think that has been more constrained over the last several years. And there is an opportunity for that to be less constrained in the future.
Yeah, that makes sense. I mean, it is true that the exciting part about your job is that you do sit at this nexus of the innovation ecosystem. And innovation is what really drives the US economy, as well as the economies around the globe. And it is true that the natural component of that is we're willing to put money in, provided at some point we can get the money out. So since you are sitting at that nexus of the innovation ecosystem, what advice would you have, say, for investors on the one hand and entrepreneurs on the other hand?
Well, let's start with investors. I think first of all, as you're thinking about, I guess professional investors, we are special. The one thing I would really say is the United States is a very special economy. And you don't necessarily realize it until you go outside the US and you talk to other countries and other country governments. And their first question, when I see a government official from another country and I say I'm from Nasdaq, the first question they ask me is, what makes the US so special? What makes the innovation ecosystem come alive here? What are the ingredients? And we talk about the educational system. We talk about, and that's really important, not only in terms of just how amazing we have these amazing institutions that we have, but also how we learn in this country, the ability to have free thought, the ability to have creativity, really kind of promoting creativity from the very beginning of an educational process. Then I think the second thing is we talk about bankruptcy laws, which sounds really boring, but very important to allow people to try, fail, and try again. We talk about the rule of law and knowing that you have a judicial system that will support a fair understanding of your rights and your IP rights. And then we talk about the fact that the capital markets and the investors are there. 39% of household income or household assets in the United States are directly invested in equities, and another 36% are invested in pensions and mutual funds. That is remarkable. And by the way, it's the highest by far in the world. There's only one other country that's very similar, one other region, and that's the Nordics. And we happen to own the Nordic markets, by the way. So it's pretty fun to see that the Nordics are actually 36% directly invested and 39%, I think that's Sweden, invested through pensions. And that is a risk-taking culture. That's an opportunity where people are focused on growth, they're focused on controlling their own future, they're focused on driving their own personal wealth, and they have a risk tolerance that I think actually really feeds liquidity into the equity markets, which then feeds the whole ecosystem. And that is a really special thing that I think we have to preserve and recognize. And then you have the VC ecosystem and the private equity ecosystem, private capital that's there to really help these companies grow and expand. So it's special. I think that's important. I know you asked for advice, but to understand that I think is important. But advice is always about focus on the fundamentals. I'm always about the fundamentals. My father was the chief investment officer at T. Rowe Price for his last 10 years, and he always said that basically the valuations of companies always come back to the fundamentals over time. So focus on fundamentals, focus on long term, focus on value creation.
Yep. And in the midst of all of that, and we've got 1 minute left, so we're going to give people a minute back. There's an AI disruption taking place. So maybe you want to say one or two final words, and but then we'll. Thank you very much.
Okay, great. Well, thank you all very much. I mean, obviously, AI is going to be defining technology for our industry for the next 10 years, and we're very excited to be a part of it.
Great.
So
Well, thank you so much.
Thank you.
Thanks, Hilary.